Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This simply starts with another video, and this time this video relates to the market and one of the small cap stocks that I find interesting at this point of time from a 1 to 2 years perspective. So let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should that with their own due diligence and research, and I'm not in favor against any company that I talk about. I'm not a member of the NSE and BSE, and that I am not a portfolio advisor. Whatever decisions with respect to investments or trading that you take, kindly do consult your financial advisor and do have an idea that all the investments into the market is laden with market risk. So whatever decisions with respect to investments that you make is laden with market risk. Before I talk about this company as well as the markets, a small request is, can you support me on Patreon? Once you do that, help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership on a monthly basis on Patreon, or a $100 membership on a yearly basis plus GST on WhatsApp, you'll get access to my portfolio, my watch list, which is a comprehensive list of 25-30 stocks, as well as analysis on companies, analysis on different markets globally, domestic markets as well, and we have discussions on everything related to the stock market or the economy, and whatever queries that you'll be having, I'll be answering that. In order to understand about the Nifty, first of all, or the market, let's just discuss about the Nifty, and I'll give you an idea as to what the Nifty is doing currently. The stock in question that I'll discuss with you, just give you an idea, is FDC, which is in the pharmaceutical domain. So we'll discuss about this a little later on, but let's discuss about the Nifty. So currently the Nifty is trading at around 24,300 levels in the Muhurat trading sessions. We did go up. Normally we do go up in the Muhurat trading session. So if we take that out, we finished on 24,200 on the closing basis. The low was 24,170. 2 3 days before that, we had a low of around 24,070. So it is not long before we might breach that. But what is interesting to see is the RSI on a 1 year basis, which is hovering around 35, 37 level. So it is not overheated at all. Even on the options market, it's not overheated the market. So what we are going to see is a sluggish market, in my understanding, from a 3 months perspective until next quarter results come out. Now, where has been the mood of the market spooked? We are talking about the China stimulus. We are talking about a lot of global events and other things. But if we look closely, what has happened is that the Nifty earnings has not been the same. So if we look at Nifty EPS, and we'll come to know well. So if we go to trend line and we find that out, so Nifty EPS currently is around 1071 rupees. We expect this EPS to close at around 1075, and based on that, if we say we finished at 24,200, based on say 1075 after half yearly earnings of FY25, we are trading at somewhere around 22 and a half times, which is not expensive but not very cheap either, because there are markets globally that are trading at single multiples or 12, 13, 14 times multiples at best, or at worst, whatever you want to call it. But we are trading at 22 and a half times after the correction, and that is why I believe that the market may not correct further, because we are already trading at a reasonable valuations with the kind of growth we are producing, but we may not go up. Now if we consider the whole year earning to be around say 1100 rupees, and we take 24,200 as the current you can say Nifty levels, then we are trading at 22 times. So even if I take 1100 rupees as the earnings for the year, we would be trading at 22 times. at 24,200. If we say that the market falls 1,000 points, now why I am saying this is that currently we are at 24,300. If you see here, there's major support at around 24,000, 23,900 levels at 2-300 points lower. If we break this, we are headed towards these levels, which are 23,300 or so, which was the election day high. So the election day high was 23,200, 23,180, and then we fell from there. This was the general election day high. I don't see this breaching very easily, but if we go to 23,300 ish level or so, then we are looking at an earnings of say 1100 rupees. Then we are looking at a situation where we'll be trading at 21 times current earnings, not forward earnings, but 21.2 times or something of that nature on current earnings, which would be very, very interesting to look at. I will not say that it is expensive in any manner at around 21.1 times or somewhere of that sort. Considering we have a say 10-11% growth, I think 11% growth is very much possible uh, year on year in the next 2-3 years compounded. Then we are looking at 1220 rupees earnings at least for FY26. Now if we go to 23,300, then based on 1220 rupees we'll be trading at 19 times, which is extremely interesting because last time around when the markets bottomed out at of 23, we were trading at 18.8 times. So considering everything, I believe between 23,100 to 23,300 should be the ultimate lower band of the market, even if we fall from here. Although I believe that going further down from here will be extremely difficult. Having said all that, we are not going to see a considerable amount of rally on the upside. I don't see 24,600 to be taken out that easily. I really don't see that happening. I think 24,600 to 24,900 is the upper limit of the market. So what we are going to see is probably 23,500 on the downside and 24,900 on the upside, 1400 point band in which this nifty may just continue to hover for the next 3 months. Individual stocks will keep on making you money, and that is why I believe that picking good quality top notch stocks is extremely crucial, because the markets will not go anywhere and there will be troughs and falls and highs and lows, etc. But you can make money if you buy into individual stocks and hold them over a period of time, say 1 to 2 years. So this is a market in which one should be looking to buy into stocks from a 2 year perspective rather than going ahead and trading even on a positional basis. Positional trading is also extremely difficult. Although I am a positional trader, I have been for the last 2-3 years. But I think at this point of time, being an investor and trading from investing from a 6 to 8 quarters time frame is a much better approach to tackle this market, because we don't know when we are going to be out of the woods. So if December quarter numbers are bad, then we are going to again be smashed into levels of 23,500, 300 levels from upper levels. So this may just continue, but for the moment, I believe that next 3 months could be difficult with respect to continuation of a consistent bull run. I think we are going to be in a range which is extremely good for the market, because if you see from a 5 year perspective, we are looking at a scenario. If I look at a 5 year chart here, which is a weekly chart, we are looking at a scenario where the market is currently trading at 51, 50, 51 RSI, and normally markets bottom out around. So you look at it here, March 23, when we bottomed out last time around, it was around 40, 39 or so. This was around 38, 39, 39 levels. So if we continue to be in this range, say this range of uh, about say 24,000. So let's go there. 24,860, from 24,860 to 23,400 levels. Again, that 1400, 1500 point band. If we continue to be here for the next 4 months, suppose another 4 months or 16-week candles become like similar to this, and we are hovering around this, eventually this 50-week moving average will come up, and so this RSI would go down even further and will be around an RSI of 40, so 3940. Eventually we'll find the strength to go up, because earnings will pick up hopefully after 2 quarters or so. I don't see this is a troublesome period for more than 2 quarters. So next 4 months, even if we spend time in a 1500 point band, it would be even better for the market from a long term point of view. So that's what I feel. I think there is a lot of money to be made over the next 5 to 10 years in this market, in the Indian market, because the underlying strength with respect to mid cap and small cap stocks is huge, and there the earnings are coming. So pick your stocks and go ahead and make your money. One of the stocks that I find interesting is FDC. I have brought that up earlier as well, probably a year back or so. Now, FDC, a 9,000 crore market cap company with a PE of only 28, 29, not very expensive, trading at 4 times price to sales, has come out with very decent numbers. So just a thought about this company overall. This is more or less a pharma healthcare kind of a company, and they make electrol or those ORS. You can say that ORS brand that sells a lot, electrol, that we buy a lot when we are having dehydration. So the company is a pioneer in the manufacturing of specialized formulation, and among the world's foremost manufacturer and makers of oral rehydration salts, as I said, ORS. Some of FDC's leading brands in India include Zifi, Electrol, and Enerzel, uh, Witkofol, and there are others as well. So interesting kind of a business. Just to give you a snapshot on the numbers, 638 crores of sales in June quarter. The September quarter numbers are awaited, but in June they did 638 crores versus 486 crores last year. From 76 crores of operating profit, it jumped nearly double to 147 crores. Margins have gone up from 16% to 23%. So, sorry, from 122 crores of profit to 147 crores. So that's pretty good. That is a decent jump of around 20%. Margins have remained stable at 23%. Eventual net profit has grown from 140 crores all the way to 160, 63 crores. So the company is growing. If you look at year on year numbers, in March 18 they did 1070, and it was hovering around 1070, 1090, 1100 crores. Then it went to 1300 band, then it went to 1500, 1700, 1900, and continuously the growth is coming on the sales front, which we look forward to. This time around, the company has already done around 1100 crores for 2 quarters. So I won't be surprised if they end up doing 22, 2300 crores for FY25. In terms of promoter holding, etc., they have around 70% promoter holding. FI holding is 2.5%, which is growing. At the moment, this is September quarter numbers. DII holding is 6%, and there is 21.7% public shareholding, which is not a lot, considering the kind of you can say small cap company that it is in. So very interesting company. If they come out with even relatively decent numbers, and in the September quarter, and there's a fall, it can be accumulated on lower levels. From a 2 year perspective, it could do well. Again, this is not a stock where you can trade intraday, etc. This is a company which you can invest into from 2, 3, 5 years perspective. If you look at a 5 year chart of FDC, you'll have an understanding that the company has done exceptionally well from 2019, when they were at 184. Then during the pandemic, it went down to 230. Even then it did not touch that low of 180 and has gone up sharply and has become, I think, 2.5x already. So very interesting company to look at. So this was a video on FDC and the markets. Yes, kindly support me on Patreon. Once you do that, help me grow the channel. Help you ask me questions and equal answers in greater detail. And do subscribe to my YouTube network as well. If you want to have a look at my portfolio, then get the subscription and you'll have an understanding that which 15-20 companies I'm really bullish on. Thank you.